Hi, good morning, and welcome to Capital Grounds Podcast. I'm your co host, Nick Miller. Got my other co host here, Joe Fisher. We're with SITG Capital, real estate investment firm based out of Texas. We've got properties in Austin, Dallas, Houston, and almost 12,000 units, billion-dollar portfolio. We're growing. We view this time as go time. We're really excited about 2024, and we've got a lot of great things in the pipeline. But we appreciate you having us this morning. We're going to talk a little bit about coffee, a little bit about current events,
Mhm.
and then we're going to talk about a little bit of real estate here. But Joe, how are you this morning?
I'm good. Thanks, Nick. It's been crazy end of the year, crazy start to the year. I think, we'll dig into like some of the reasons why, but yeah, we've had a lot going on, and of course, the holidays always make things go a little bit slower than we like, and we all take some time away to spend some time with our families, which is the good part about that. So we've been away a little bit, and happy to be back talking real estate and coffee and current events, things like that.
Yeah, yeah. Well, and I'll share with you what I'm drinking this morning. PT's Coffee. They're based out of
Mhm.
Topeka, Kansas. I'm drinking their Southpaw blend, which I'm left-handed. This is my left hand. You can't tell. But I'll tell you, it's a medium light roast. It's
Yeah,
not my favorite. I'm not a big fan of the lighter roasts, but very excited to share with you my mug
let's see it.
because,
Oh yeah, you got the new SITG swag, huh? Look at that.
yeah, yeah.
There you
So
go. I
if
like it.
you're if you're a client of ours, an investor, you'll probably be receiving one of these if you made it in by the cutoff. Probably in the next couple of days if you haven't
Yeah.
received it already. But it's exciting stuff. It's nice to see it on something tangible.
Oh, it
So
looks great.
pretty
Yeah.
cool stuff. I'm excited for you to get yours, Joe, and see what it
Yeah.
looks like.
Yeah, I'm looking forward to it. I mean, for those of you that are not watching and just listening, it's just, our logo on a nice what size is that? 8-ounce Yeti mug. It's
10 ounce.
10 ounce, the
Uh,
10-ounce Yeti mug. So
yeah,
Yeti being an Austin brand, we thought that fit well going with that, and just putting a nice simple logo on there. And to
yeah,
defend Nick a little bit here, I think we're trying to get these to you guys by Christmas, and he put the order in like October. It kept getting delayed. So what's new? Get some
yeah.
delays, going. So
Uh,
they'll be out to you guys soon, and probably by the time you listen to this, actually, you'll have them.
Yeah, yeah, it was an adventure getting them out and getting the order, just getting the mugs to me was an adventure, and then getting them all packaged and everything that took a bit of time. But yeah, hopefully everybody will enjoy it. And I mailed them out last week, so just delay after delay. I don't know about you, Joe, but
Mhm.
I'm here in Kansas for viewers and listeners that don't know. Today, I think the weather outside when I last looked, it was -6 degrees. So it's like being back in Minnesota.
Man, yeah, you must feel right at home. I kind of feel like
Yeah.
I'm in Minnesota down here because we got that cold air pushing down to Texas, and for
Mm.
us, anything under 50, we're cold, right? So I think today, I don't know if we'll get to above freezing today. We might not even get to above
Mm.
freezing, so that's pretty
Wow.
tough for us. But
Yeah, it
usually we
is.
only have a couple days of that, and we're back up into 50s and 60s, and so looking forward to that rolling back around. Yeah, I'll share with you real quick. I've got a mug here that my wife and I
Mm.
picked up in Barcelona. We did a
I
trip over
love
the
it.
holidays to Spain and Italy. Barcelona was one of those stops. So we were able to do a couple coffee tours and just try different coffees and got some really interesting information on kind of how coffee works and just things to look for. And so I learned a little bit more about coffee because, again, you guys, I'm not I'm not an expert by any means. Uh, but one thing I thought was interesting is, so our tour guide, she's actually from Cuba, and she was
Oh,
living in
wow.
Spain, going to school, and so she told us about how I've talked about Cuban coffee before and all that, and Cubans believe Cuban coffee is the best coffee. I might have to agree with them, but the reason it's so good actually is because of a little history. So they used to, and they still do this actually, but in order to transport the coffee beans to Europe, they would roast them and coat them in sugar in order to preserve the bean longer.
Oh,
So that's how
interesting.
they've always done it there, and then that's how you get the sweeter notes that you have with a Cuban coffee typically. So a lot of people like that, myself included. Not everybody does. Some people like a bitter or more floral uh, type of taste to your coffee. So it just depends on your preferences, I guess. But I thought that was an interesting kind of tidbit, and maybe we could bring up some other points from that in another episode. I don't want to take too much time on it. I just thought that was interesting from a history standpoint.
Yeah, that's fascinating. And how cool is it that you were, halfway across the world having a conversation about Cuban coffee with
Yeah,
somebody from Cuba? I love that. I think that's
yeah,
great. That's one of the joys of traveling, right? You just never know. I feel like every time I travel, I interact with somebody at some point on the trip, like, oh, really? You're from not far away from me, whether it,
right.
is a state or two over or whatever. But the world is a lot smaller than it seems, and I think the
It
more you
is.
travel, the more you learn that. But
I agree
we're
with
all in
you.
this together. But um, would love to hear more about that in a future episode. I think that'd be great.
Yeah, yeah. We'll have to dive into some more, different types of coffee and what to look for and things like that. It's as we learn a little bit more. And Nick, maybe when you're down here, maybe we go to a coffee shop and we do a little more an episode a little heavier on coffee and sprinkle in some real estate, because I know some people like us talking about coffee. Some people are just here for the real estate, but again, we're here to talk about Capitol Grounds, and to us that means a little bit of coffee talk and a
Yeah,
lot more real estate property talk. So
man, I think that sounds like a great idea. I'll have to figure out the technology and we'll get that done. But Joe, obviously we're in 2024 now.
mhm,
We wrapped up 2023. We had a lot of big things going on.
we did.
We had a number of projects that we completed, a number of projects we started. Being the managing partner, would love to hear your perspective
Mhm.
on, I don't know about you, talking about traveling, but one of the things my wife and I do that I think is really fun is we like to do highs and lows. So we talk
Mhm.
about the things we really liked
Yeah,
and the things that we feel could have gone better. Would
sure.
love to hear your highs and lows of 2023 if you've got something on your mind.
Yeah, so I think one of the lows for me, we'll start there. We'll start on the bad end. Was some of the stuff that's been going on with some of the local municipalities, just working through them being so short-staffed, and development's already hard enough, right? Without having excessive delays from a municipality or from a government entity, right? So I think for me, that's been the toughest to work through. I
Mm.
have hundreds of emails just on this subject for one project, right? So it takes up a lot of time, and it again the time part is money when we're talking about real estate. You don't want a piece of property sitting there not working towards an end goal of producing revenue for you and your investors. So I would say that's been the low point of the year. Now we've worked through it. Looks like we're on the other side of that for the most part. I expect there will be more challenges, but hopefully 23 was the worst for that. The other thing that's been difficult is just financing in general, and I think
Mm.
everybody's
Sure.
experienced that throughout the industry. We've been lucky that we have good relationships and we've been able to still get financing. But I do think that industry overall, that's kind of been the low for 23, is it's been pretty difficult. Some highs for us, I would think just what we've added to our pipeline. I mean, Nick, you kind of alluded to it, and I was bringing up the website here because I think we're pretty much up to date, besides a few things that we don't have locked up yet.
Yeah.
But we finished our Fearless project and got it fully occupied. We sold our Fisher Street project and had a above 30% return on it in a not very great market, to be honest with you. We made a lot of progress on uh, our Akron project in downtown Dallas, and then we added four really good projects to the pipeline between Houston and Dallas. A couple of those smaller townhomes, and all the way up to as big as 164 unit in downtown Dallas. So I think from that perspective, we've done a really, really great job, even though acquisitions, just pure acquisitions of existing multifamily has been tough due to a lot of what we talked about. And I don't think the hammer's quite fallen on all of these operators yet. So I think 24, that will start to turn for us. But yeah, it's been pretty neat to see this pipeline build up over the last year.
I agree. And excuse me, in particular, what I enjoy is seeing a project come from thought, concept, valuation, Excel
Mhm.
documents, whatever, to renders and ground being broken.
Yeah,
I've been with SITG for now a little over a year, and as I experience more of what we do and what we have to offer, it's really exciting. It's really neat to see something come to fruition like that. So,
I agree.
um, I was there uh, down in Dallas with Joe when
Hmm.
our Acrid project broke ground, and that was really exciting. We got to go and check out a number of different properties, but the apartment complexes we're building in the Cedars district of Dallas, really looking forward to seeing those
Yeah,
finish.
it's fun to your point to see, an area that maybe is underutilized, and you can kind of see the vision of, oh, if we're building this here, and they're building this over there, and this is coming and that is coming, it's gonna look completely different in 5 years. And I know people don't like gentrification, right? But where we look to build, we don't want to tear down an old building or historic building. We're buying property that's you know doesn't have anything on it, that really needs something on it to bring some more life to the community. So we're passionate about that. We want to make the communities that we invest in better and better. It's not only good for us from a dollar perspective and an investment perspective, but it's good for just overall the community, and making it a desirable place for people to live and work and enjoy
Absolutely,
their time, right?
I
And
agree.
again, doing it infill on property that's not being utilized, I think is a big win, because then you have something that's producing for the city, creating more housing options for people, which in turn keeps prices lower, and adds to the supply. So we're passionate about doing that, and yeah, Nick, I'm excited to see what Cedars becomes over the coming years.
You know, uh, I had a mentor back in the day that kind of impressed upon me an idea of being a producer and not a consumer. Economically, we as
Mm-hmm.
individuals are often consumers, right?
Right.
And what he tried to impress upon me is, hey, don't be a consumer. Don't just consume. Don't be
Sure.
kind of a vacuum for stuff. Be a producer, make something, do something, add
Hmm.
more value to the world than you take in. And I think that's what we do, especially with the projects in the Cedars, because, like you mentioned, they're empty lots, and as the rest of that area continues to improve, this is an opportunity for us to add something, make something of value to that mix. And I'm with you on gentrification, but I hope people don't see see what we do and think that we're part of the problem. My hope is that they don't anyway, because I don't see us that way, especially with the
Right.
work that we do with some of our value add properties. Um, I think we really add genuine value to those communities, but
I agree. I agree. And everybody has their own opinion, right? And that's okay.
right.
But, I think one thing people have a tough time understanding is it's a basic principle, but supply and demand, right? You have to increase, or if your population is growing, you need to increase the supply in order to meet the demand, which in turn keeps prices lower. So I think for us, that's where we're looking. A lot of demand in Texas, as you guys know. 30 million people live in the triangle where we operate, and it's growing significantly in each one of those markets. And so we're trying to position ourselves to be able to be a part of the solution, and not the problem.
And if you're a listener and you haven't listened to some of our previous episodes, but you think that the housing crisis is of interest to you, check our website, check our YouTube channel. We've got a couple of episodes and a few articles out about the housing crisis. And personally, if you're interested in real estate, as I am, I find these conversations enjoyable and of value because I often learn something and it's interesting to hear other people's opinions. But Joe, I think you hit the nail on the head. We have to create additional units, otherwise the problem doesn't get resolved.
Right.
Not building something does not resolve the problem. It's just going to continue forcing housing prices to increase. So
Yeah. So there's some other good, if you guys are interested in this kind of stuff. I think Freakonomics put out a couple episodes. One was on why rent control doesn't work, things like that. And it all kind of feeds back into this issue. So yeah, if you're interested in that, to Nick's point, check out a few other things. So that's kind of just super high level of 23. We grew a lot in 23, even with all the challenges. And so, I think we're blessed and we've been able to provide, we haven't missed a payment to any of our investors. We're, able to do that while some others have not been able to. So, I'm very thankful for everybody in the organization and how everybody handles their business and runs a tight ship every day, and couldn't do it without the people that are involved. Nick, you're included in that. Luis, you guys have seen him on here. He's included in that. We've got Nikki, we've got Mo, we've got Rez, we've got Angel, we've got Fred. All of these people that help us day to day, among others that are not officially a part of the team that still help us in our day to day pursuits. So just, I guess, thanks to everybody, because 23 we wouldn't have grown without the people, I would say.
I love that, Joe. I love that. And another shout out, outside of our workspaces, but our spouses, man, our
Yeah.
spouses,
Yeah.
they listen to us. I know my wife listens to us or listens to me, vent about things that she couldn't care less about. But her support and belief in what we do
Yeah.
is a nice cushion. And I know your wife does a lot, and
She does. Yeah.
certainly the partners and spouses of the rest of our team. So anyway, yeah, 2024, we're not slowing down. We're going to keep the pace up. We're going to keep staying aggressive in our acquisitions and our development, because if you look at it, if you look at the time frame, you look at the units coming online over the next year and a half. I think we talked about this in the previous episode with the sag in housing starts that 2023, Q3 and Q4 experienced. There's going to be another not shortfall, but there's going to be another period where we need, I guess shortfall would be correct. There's another period where we're going to need more units. And if we want to continue helping the problem, then we, SITG, we've got to continue building new complexes,
We do.
because our peers aren't, whether they can't paper it or can't find the financing or the investments or what have you. There are a lot fewer numbers out there than what we need.
Yeah, I agree, Nick. And I think that's a good segue into kind of what we're looking for in 24, what we kind of see happening in the macro, and in our markets that we operate in as well. And I think you're right. I think it's been tougher to have starts on the development side. It's also, we mentioned it, it's also been a lot tougher to make acquisitions work in general, to make those pencil with rates much higher and kind of staying higher. I do think 24 will see some reprieve in rates. However, I don't know that it's going to be drastic, right? If we look at I think I just saw yesterday, and Nick, you can correct me if I'm wrong, but I think agency debt, for example, we're just over 5.5% on that currently. Which, I mean, if you think about it, guys, it's not really that far off from historical averages, right? So I think there's some things that we're going to have to look at in 24. Some of that being that, deals are not going to, obviously they did not perform well in 23. If you were a seller, you kind of had to be a seller there. It wasn't really by choice in most cases. So I think we'll see 24, some of this debt that needs to get refied. I think we'll see some of that come up and be a bigger factor later down the road. And there's going to probably be more opportunities on the acquisition side, just to be able to buy existing that maybe has been underperforming or maybe has been poorly managed. And we're seeing some of that right now. And so I think you'll see more of that throughout the country. I don't know that construction will really take off this year. It might be 25, to Nick's point, before it does, when we start to see that a lot of the supply has gotten worked back out, and we're going to be on the short end of it again in 25 or 26 or even 27, because there is such a lag there. So I think 24 is going to be a really interesting year, and hopefully a year that we just continue to buckle down and continue to grow and put ourselves in a position to be really successful for the firm and for our investors in 25.
I agree, Joe. I think that was nicely said. 24 is an opportunity year for us, just like 23 was. I think 24 even more so. And, you mentioned a good point. Rates aren't really that far off from their historical averages. I think we've mentioned that before. But, when you combine that with increased costs and insurance and some of the other construction costs, if you're doing development that we've seen, there are a number of other variables that have created a situation that's a little tougher than what many firms can do. And to be frank, when I look at our competitors, our peers, we are very nimble. We're very nimble. We pivot easily, and we're a lean and fast team. I can't say that about some of our other peers. They've got a lot of people on staff, a lot of excess spending, and that's just not who we are.
Yeah, we it probably goes back to how most of us on the team grew up, right? We were eating ramen noodles in college and things like that. And so yeah, if we can operate lean, we will, because ultimately that goes back to the overall success of the firm, and in turn the returns, right? So to Nick's point, we don't have a huge team, because we're able to get it done with our team, and everybody has a passion for this and enjoys it. Does that mean we're not going to bring on more people in 24? No, I wouldn't say that. I think it just depends, right? And where we see gaps, and maybe where I'm getting overwhelmed, or Nick's getting overwhelmed, or somebody else is, we might need a little help. And I think we do a pretty good job of being able to kind of balance that, to Nick's point.
24, big year.
It
24 is
is.
going to be a really big year. So we like a mantra, forward, pedal to the floor in 24 and then thrive in 25. Yeah, as cheesy as those are.
Yeah,
But
we like the cheesy stuff. If you guys didn't already know that, I mean, skin in the game, pedal to the floor, 24, that kind of stuff. It's gets us up out of bed in the morning, I guess.
Hey, look, whatever the mantra is, as long as it works, that's what matters. That's what matters.
Yeah,
But well, Joe, hey, I appreciate your time this morning. I know this is a bit of a shorter episode. We wanted to do a recap and kind of update our investors on where they're at. But if you haven't checked out our website, check it out, sitgcapital.com. Check out our YouTube, check out podcasts. Honestly, though, if you hear something, you've got questions, you want to learn more about it, your interest is piqued, shoot us an email. Give us a call, reach out to us. We'd be happy to have a conversation. As much
absolutely.
as we are about bringing on new investors, we're also about educating people, because, that's why I got into finance in general, just
I
period,
agree.
was
Yeah,
because there's such a lack of education out there. And I think specifically around real estate, honestly, real estate and economics, and how those intermix and how much that affects our economy as a whole. I think there's a lot of knowledge to be shared out there. So if you'd like to learn more, give us a call, reach out. Happy to have a conversation. And if you feel like you are in the industry or industry adjacent or what have you, and you feel like maybe you could add value to our show, give us a shout out. We'd love to have you on and have a conversation there as well.
yeah. Well said, Nick. I think you're absolutely right. I agree with you that a bigger reason that I wanted to be in finance was education and not receiving that when I was younger, and understanding the power of financial literacy, really. And so we're looking to do that for real estate, guys. So if there's something you want us to explain deeper, you have questions, you have ideas, we might just even do an episode where we just go over questions that our investors and/or just people listening have. That way, you guys can get your questions to us, and we can answer those, and we can see kind of where you want to learn more about, or what aspect of real estate or finance even that you're curious to learn more about. So let us know. Like Nick said, please.
Hey, Joe, thanks for your time this morning. Thanks for the conversation. It's always good to connect. We'll be looking to connect again next week and have another chat. So viewers, listeners, thank you for your time. We always appreciate your participation, and we'll look to see what the rest of January brings us. But Joe, thanks again. We'll see you next week.
Thanks, Nick.
Bye. Hi, good morning to Capital Grounds Podcast. I'm your co-host, Nick Miller. I've got my other co-host here, Joe
Hey,
Fisher.
just a second, Nick. You should start it over.
Okay.
You didn't say welcome to. You just said to. I just think you're gonna look. You're gonna look at it later, and you're gonna be like, "Oh, damn it!" So just start it over real quick.
Okay. Thanks for calling me out.